Good morning, everyone. I am CA Sunil Sanghvi, Vice Chairperson, Ahmedabad branch of the WRC, moderator of this webinar, along with CA Anjali Choksi, Chairperson of Ahmedabad branch of the WRC, who is a moderator of this program. We are delighted to welcome you all in the webinar being organized by the Continuing Professional Education Committee of ICI. The chairman of the CP committee and vice chairman of the CP committee is also on the platform. It is our pleasure to be moderator of this webinar on the key changes and highlights of FTP 2023 and political donation controversies and way forward. In a short while, we will starting this webinar. I would like to apprise you about the CP committee. The profession of the chartered accountancy has always been recognized for the quality of education, training, and the strong grip over technical standards. With the globalization and increasing business complexities, it is essential that chartered accountants equip themselves with the change occurring and stand out of the expectation of the society. Our institute is constantly working and contributing to cater to the needs and requirements of our members and has taken various initiatives for them from time to time in this direction. With this view, the Continuing Professional Education Committee of the ICI has always been the foremost to provide opportunities to their members to boost their knowledge base. The program for today is as follows. We have 2 sessions of 1 hour each, and topics are: the first session would be the key highlights of the Foreign Trade Policy 2023 and key changes vis-a-vis the previous policy. And the second session, that is 11 to 12, that will be the political donations, controversy, and way forward. Our eminent speakers will talk about the mentions of the 2 topics, areas of the professional interest. Now, I would request the Vice Chairman of the CP committee to welcome address. But before that, the Vice Chairman, that is CA Gyan Chandra Misra Ji, is a fellow chartered accountant and associate member of the ICI and a qualified concurrent auditor and an insolvency professional. He has a very wide experience, more than 24 years of the professional standing. He is a vice chairman of the CP committee, as I told you, the director additional of the IIPICI of the ICI. He is a chairman of the committee on the insolvency and the bankruptcy of the ICI. He is a convener, tender monitoring director of the ICI. With this brief introduction, I am not reading the entire profile, it's very long, sir, but with this brief introduction, I'm welcoming you and would request you to give the opening remarks, sir.
So thank you, CA Sunil Ji, very respected moderator of the session, my good friend and of course council colleague and chairman of the CPE committee, CA Purushottam Khandelwal Ji, CA Vaibhav Jaju Ji, today's speaker, Ajit Nath Tiwari Ji, respected secretary and his entire team, and very importantly, all the participants. Good morning to all of you. Friends, we all know that CP committee is working tirelessly for the best interest of the members to disseminate the knowledge, upgradation of skill, and honing of the skill sets what we have acquired earlier. This is the time when we have to upgrade ourselves to the best of the abilities, because if we see as of now, the main stakeholder with respect to the audit and accountancy profession is the chartered accountancy profession. So onus is huge that we have to update ourselves. We have to make ourselves abreast with the various changes, and we have to deliver to the best of the expectation of the government and society at large. Friends, today's 2 topics well chosen by the committee. The first one, the political donations, controversies and way forward. And the other one is Foreign Trade Policy 2023, way forward vis-a-vis the Foreign Trade Policy of 2022. These 2 topics are of utmost important, very new, and concurrence for the purpose of practice of the chartered accountants. So it's really up to us how we are going to take the best of the speakers they are going to deliver. I'm sure that this 2 hours power-packed session by the learned speakers shall enrich our knowledge and skill, and we shall be able to discharge our duties in both the areas to the best required. Friends, Chairman sir is here. He is smiling, and now his time is to address us. I'll not take much time as we are here, to learn more and more. I wish each and every one of us happy learning and happy weekend also. Thank you very much, Sunil Bhai, for your generous, introduction and giving the space. Thank you.
Thank you very much, Vice Chairman, sir. Now we have with us the Chairman of the CP Committee, CA Purushottam Bhai Khandelwal, who is our beloved Chairman from our Central Council member from our city, Ahmedabad. Last year he was Vice Chairman of the Committee for the Career Counseling, and in that committee the record was recorded in the Limca book records. He was last year Vice Chairman of the Committee for the Member in Practice, Deputy Convener of the Union Director in the 2022-23. Before that, he has also served as the Secretary of the WRC in the year 2018-19, the Chairman of our branch, Ahmedabad branch, in the 13-14. With this brief introduction, we welcome you, sir, and would request you to give the welcome address, sir.
Good morning, everyone. Young, dynamic leader of the profession, Gyan Chand Mishra ji, Vice Chairman of this committee, Vice Chairperson of Ahmedabad branch, and my dear friend, Direct Tech Savvy, Sunil Sanghvi ji, learned speaker for this session, first technical session, Vaibhav Jaju ji, Secretary of this Continuous Professional Education Committee, Ajit Nath ji Tiwari, and dear participants. It gives immense pleasure to be amongst you. My committee, CP committee, this year dedicated to upgrade your knowledge, not only knowledge, but upgrade the technology. This year we have changed few things which I would like to bring your notice. One is the rolling period of 3 years is gone away because we are organizing a lot of CP programs throughout the year. We have a lot of PSUs, is public programs, organizing unities there. So there is no need to be linger on up to 3 years because लोग बोलते हैं ना आज करे सो कल करे सो परसों, इतना जल्दी क्या पड़ी, जीना है बरसों. अगर आज नहीं किया तो अगले साल करेंगे, अगले साल नहीं करेंगे तो उसके बाद करेंगे. और जब 3 साल पूरे होने आते तब पता चला हमने तो कुछ किया ही नहीं. तो हम आपको कंटिन्यू अपडेट रखना चाहते हैं. आज का काम आज ही होना चाहिए. इस साल जो चेंजेस आए वो इस साल ही अपग्रेड होने चाहिए, अगले साल पे क्यों डाला जाए? क्योंकि जिंदगी में लर्निंग, डी लर्निंग और री लर्निंग बहुत सारे एक्ट ऐसे हैं जिसको भूलना जरूरी है. क्योंकि कंपनीज एक्ट 1956 हैज बीन चेंज, न्यू एक्ट हैज बीन कम. फॉरेन ट्रेड पॉलिसी अभी जो कल तक जो थी वो पुरानी हो गई, अभी जो नई आई है. तो आपको री लर्निंग तो करना पड़ेगा. बिकॉज व्हाट इज अवर एसेट, व्हाट वी आर सेलिंग अवर सर्विसेज. अगर हम सर्विस सेल करेंगे वो अपडेटेड सर्विस नहीं है तो सरकार और स्टेक होल्डर के बीच में हम अपने आप को स्थायी नहीं रख पाएंगे. तो हमको अपने आप को अपग्रेड ही रखने का है, क्योंकि वी आर नॉट सेलिंग एनी गुड्स, वी आर सेलिंग अवर सर्विसेज. तो वो बोलते हैं कि वो हमारी जो शार्पन है, जो धार है, उसको हमेशा शार्प करना पड़ेगा, तभी हम लोगों को अच्छी सर्विस दे पाएंगे. सो माय इंटेंशन इज टू do the best program. All my program organizing unit is also doing a good program. Rather than the program organizing unit, we dedicated with the Gyan Chand Mishra ji and my committee, we are also planning to organize every Wednesday for the very important topic of the professional relevance. This topic is in the current importance for the professional. So we will be continue organizing this program also. And not only the member, those who want to give a feedback or what kind of program they want from us. If the faculty is not physically available in the branches or a remote area, but we will able to bring in this such a platform, so the member at large will be benefited. So this is one of India's best faculty. Will certainly, if we invite Ajita ji Tiwari ji, will invite Gyan ji will invite, certainly they will come to the platforms. And always the best of the faculty. मैंने आज तक जिंदगी में देखा कि जितने भी नॉलेजेबल आदमी उनको अगर हमने बोला कि आप आइए और हमारे प्लेटफॉर्म में मेंबर्स को हेल्प करिए, तो चार्टर्ड अकाउंटेंट्स का एक तो मैंने देखा है कि जो मेंबर सीनियर है, नॉलेजेबल है, इंटेलिजेंट है, वो हमेशा तत्पर रहते हैं. मतलब वो अपना डिनोमिनेशन ऑफ नॉलेज, वो बोलते हैं कि ज्ञान बांटने से बढ़ता है. तो कभी भी न तो कोई हमारे से चार्ज लेता है, न कभी मना करता है. तो ये प्रोफेशन की ब्यूटी है, क्योंकि हम अपने प्रोफेशन में भी क्या करते हैं, हम उन्हीं आर्टिकल को तैयार करते हैं जो फ्यूचर जाके हमारे कॉम्पिटिटर होने वाले हैं। इन सेम वे जो हम फैकल्टी से ज्ञान ले रहे हैं वो भी उनके लिए कॉम्पिटिटर, लेकिन हम ऐसा देखते नहीं कि हम देखते हैं कि हमारे मेंबर्स अच्छी सर्विस कैसे दे पाए, हमारे मेंबर्स का रेपुटेशन कैसे बना रहा है स्टॉक होल्डर की नजरों में, गवर्नमेंट की नजरों में, कि अपडेशन इज अ कंपल्सरी. So this time we have chosen two topic. One is the changes in foreign trade policy. क्योंकि यूक्रेन युद्ध के बाद में बहुत सारे ऐसे इंटरनेशनल चेंजेस हुए हैं तो गवर्नमेंट्स को फॉरेन ट्रेड पॉलिसी को चेंज करना पड़ा. तो वैभव जाजू जी अच्छा कोई स्पीकर नहीं है. They are dealing in the foreign trade policy. So they will be dealing the first topic. And another topic is very much is an political donation controversy in this way. Everybody knows that we all got the notice from the income tax department. Those who are given donation to political parties. I'm not saying that the chartered accountant is at fault. If somebody comes to our office and they want if their client wants to give a donation to political party, certainly we give advice that yes, the donation given to political party is exempted. It doesn't mean that it is the involvement of chartered accountant. So lot many regulator, they unduly involve chartered accountant into this advisory role. If the advocate is giving advice to the clients, they will not be a part of the conspiracy. But the Sarkar is looking at third eyes that the chartered accounts, they look the suspicious as a chartered accountant they are doing. But in my honest member is not involving this profession, even that they got notice. So we make available the best faculty of India. Tushar Hemani, those who are in the practice of High Court of Gujarat, is also practicing the Supreme Court, and they will give you. He's also chartered accountant and senior lawyer. So they will give you the best solution that they are getting the notice. So with this, I once again thanks to the CP committee, Sunil Bhai, and organizing a wonderful program. Thank you so much for giving me the opportunity. Welcomes all of you in this seminar. Thank you so much.
Thank you very much, Chairman Sir, C.A. Purushottam Khandelwal ji. Yes, you have said rightly correct. Our profession is very noble profession. Everybody is ready to share the knowledge to other, and we are not looking the other member as our competitor. Yes. Now, moving ahead, our first faculty, that is C.A. Vaibhav Jajuji, regarding the key highlights of the foreign trade policy 2023 and key changes vis-a-vis the previous policy. He is a chartered accountant of our institute. He is also the LLB, the law graduate, and is a principal of the Dhruva Advisors, the leading consulting firm. Dhruva Advisors, specializing in the field of indirect taxes, is looking after the indirect tax service provided the entire of the Gujarat. He has 14 years of experience in litigation, consulting, and the advisory practice. During his tenure as a professional, Vaibhav has dealt in areas of service tax, central excise, customs, value-added, central sales tax, foreign trade policy, SEZ, and GST. He advised companies on planning, structuring, optimization of complex indirect tax matters. He has assisted to the clients for indirect tax litigation, including the representation before tribunal, appellate authorities, and the policy relaxation committee under the FTP. He has been instrumental in filing writ petitions and revision petitions before the Gujarat High Court. With this brief introduction, I'm welcome C.A. Vaibhav Jajuji. And one more thing I would like to inform you that right now 650 members have joined this event. So huge lot of applause for our CP committee, for our chairman C.A. Purushottam Khandelwal, for the vice chairman Misraji, our faculties, and all the members who have joined. Now I would like to invite our first faculty, C.A. Vaibhav Jajuji, to take the session forward.
Thank you. Thank you all. So we have good 40-45 minutes to deliberate. So without taking much time, first I would like to wish everyone good morning, and I express my gratitude and thank the entire CP committee, C.A. Purushottam Khandelwal, C.A. Gyanchandra Misraji. On a lighter note, the name itself has Gyan, therefore knowledge dissemination is inevitable with this committee. CA Dr. Anjali Choksi ma'am and CA Shri Sunil Sanghvi ji for providing me this opportunity. And I also express my gratitude to my fellow brothers and sisters for taking out time and joining this webinar. Now, quickly moving towards this topic, we have bifurcated this topic into three segments: background, foreign trade policy, key highlights, and in-depth analysis. But due to paucity of time, I am skipping background for the time being, and I am going directly on the highlights, which is the policy approach. The policy has been designed with a renewed approach. Most of you must be aware that a WTO dispute panel had in 2019 ruled that several export promotion schemes in India are inconsistent with the agreement on subsidies and countervailing measures. The judgment was based on the complaint filed by United States of America. Accordingly, the current policy sees a move from shifting from incentive-based to remission-based. Typically, remission-based would imply that only the tax costs on procurement of goods and services for the exports are provided back to the exporters. Further, the policy endeavors to create an enabling ecosystem that will support international trade. Next, there is a focus on promoting export through collaboration with active involvement of state and districts, which will deal separately under the Chapter 3. The policy acknowledges need of enhancing ease of doing business and make suitable changes at several processes. Emerging areas like e-commerce has been specifically attended to, and special plan of action has been charted out for promoting these areas. Greater emphasis has been given to importance of trade facilitation to safeguard and accelerate the international supply chain. Lastly, the policy is expected to be dynamic and responsive. The key highlights of the policy: breaking away from the tradition, the new FTP has been structured as a perennial policy. It has no sunset clause. While typically the earlier policy were for a period of 5 years, the last policy was extended for another 3 years due to formulation of policy in line with WTO dispute panel ruling and COVID-19. This somewhat provides certainty to the trade and industry and showcases the government's intention to have a long-term plan for development of ecosystem boosting export. It is also the intent of the government to incorporate continuous feedback and trade from trade and industry to streamline processes and update the FTP from time to time. A special one-time amnesty scheme for EO defaults under EPCG and advance authorization scheme has been announced, which is a welcome measure. Focus on the policy build on the capacity building is key feature of this policy. Special attention to e-commerce export, streamlining SCOMET policy are some of the key features of this new policy. Now, with this, let us now move to detailed chapter-wise analysis of FTP 2023. Here we have attempted to provide a comparative analysis at a broad level of the new policy vis-a-vis the previous one. If you see structurally, the policy and schemes remains the same with some alignment and changes in processes and procedures. Chapter 3 dealt with export from India scheme has been omitted as an alignment measure. Chapter 3 under the previous policy provided for SEIS and MEIS incentives, which were already phased out in the previous policy and therefore omitted under the current policy. Chapter 3 is replaced by a chapter on developing districts on export hubs. Further, 2 new chapters promoting cross-border trade in digital economy and SCOMET have been newly introduced. Now going to chapter-wise, chapter 1, which is legal framework and trade facilitation. So India is signatory to WTO's trade facilitation agreement, and therefore a national committee on trade facilitation will be constituted to facilitate coordination and implementation of this TFA. The national committee will look at improvement in ease of doing business through reduction in transaction cost and time, reduction in cargo release time, a paperless regulatory environment to enable ease of doing business, a transparent and predictable legal regime, and further to have an investment climate which would get inflow of investment and result into a better infrastructure. Online facility for e-registration cum membership certificate and registration certificate have been introduced. Online facility for e-certificate of origin through digital platform by designated agencies have been implemented. And this will help for both. The issuance will be for both preferential and non-preferential certificate of origin. Further, a unique number and a QR code shall be endorsed on every certificate of origin for validation and authentication purposes. A 24x7 help desk facility to assist the exporters in filing application on the DGFT portal and other related matters to the policy will be provided. The earlier policy already had town of export excellence. Now, any town which are producing goods of INR 750 crores or more were notified as T based on their potential export growth. Such T, however, had a reduced threshold in case of sectors like handloom, handicraft, agriculture, fisheries, and such sectors. Now, 4 new towns have been added to this list. There were already existing 39 towns. 4 new additions have been made in addition to 39. They are Faridabad, Varanasi, Mirzapur, and Muradabad. Duty entitlement DCT exemptions, which were earlier provided to handloom, handicraft, leather and footwear, marine, sports goods, and toy sectors, are now restricted only to marine, sports goods, and toy sectors. The coming change, which we are going to discuss, is a welcome change, whereby the threshold of export performance for the status holders has been lowered for 2-star to 5-star export houses. So on the screen, if you see, we have done a comparative analysis of the previous threshold vis-a-vis the threshold provided by the new policy. And what this will help is, if suppose certain export status holders who were 4-star or 5-star export houses with their potential, they can now enjoy to be a 1-star, 2-star or 3-star export house. Further, certain exporters who were not even eligible as a status holder could now strive to be a 4-star or a 5-star export house. So this is a welcome change. As the status holders, we are aware, they get accreditation and they get additional benefits, which now they will be available to. But it is pertinent to note that to have this threshold, the computation will be 3 preceding financial years for obtaining such status of the turnover prescribed. In addition to that, these were the benefits for a status holder. Under the new policy, the status holders have now been obligated also. They have to play a role of partners in mentoring or providing mentoring to skill upgradation and training in international trade to specified numbers of trainees in a year for a minimum duration of 6 weeks. Coming to chapter 2, which contains general provisions, the term technology has been separately recognized under the policy and defined under the policy. Previous policies didn't have this mention, and this is rightly so, given that India is a forefront runner in the field of technology. Another change is an IC would be required at the time of provision of services or providing technology related services for availing benefits under the policy. Now, to our mind, this change has come in light of previous in line of bone of contention under the previous policy, and we as a firm were part of this matter, where we had represented Smarty Solutions before Bombay High Court, where the matter was that the applicant had provided the service. While providing the service, he didn't have an IEC registration, but while applying for the SEIS benefit under chapter 3, before that time he got the IC registration and applied. The department's contention was that when the services were provided, the IC was not there, and therefore the benefit will not be available. The Bombay High Court ruled in favor of the appellant, and it said that it need not be necessary that IC be available at the time of rendition or provision of services. It can be available while claiming the benefits. Though this change has been made as an alignment or to avoid any future litigation and dispute, but interestingly, as we discussed in the preceding slide, chapter 3, which provided for MEIS and SEIS, have been specifically removed or omitted in the policy as they were phased out under the previous policy. And therefore, as of now, if one look at a service provider typically has only one benefit available under the current policy, and that is EPCG. And while applying an EPCG license, IC is mandated. And therefore, to give you all this brief, this provision as on date doesn't have any ramification on impact. But in future, if certain incentives are introduced, then one will have to keep in mind that to avail those incentives, the IC should be available with the provider of service at the time or before rendition of the services. The powers of the DGFT have been widened to specifically permit clearance of restricted items or items traded through STE from customs against authorization. Again, an important and a relaxed change where import of refurbished or reconditioned goods, that is second-hand spares of capital goods, are now freely permitted and subject to production of chartered engineer certificate to the effect that the residual life of the spares is at least 80% of the original spare life. And I think this is a welcome change which was not available under the previous policy. The current policy accepts, mentions, and regularizes a merchanting trade. What merchanting trade would typically mean that goods are supplied from one country to another country by an Indian intermediary. However, the goods never touch the Indian ports or the custom frontiers of India. Such trades, merchanting trade is permitted subject to RBI compliances. However, merchanting trade of sites and comet goods is not permissible. Again, a welcome change has been made from a self-certification of certificate of origin. So as you are aware, certificate of origin is helpful to substantiate that the goods are manufactured in a particular country. And these are important because there are preferential trade agreements, foreign trade agreements, and other such relaxations or concessional agreements entered between two countries because of their treaty or the relationship. Now, a self-certified certificate of origin will suffice for the foreign counter importer to take this benefit from the approved exporters. So status holders are approved for such self-certification, and they shall be recognized by DGFT based on availability of infrastructure, capacity, and trained manpower. Chapter 3, as mentioned earlier, this is a new chapter being introduced for developing district export hubs. So basically, this chapter focuses on objective to promote exports at the district level and development of trade ecosystem at a grassroots level. Under this chapter, a committee will be formed and they will come out with an action plan to boost export. So the committee which will be formed will be termed as District Export Promotion Committee. It will be chaired by Collector Magistrate Development Commissioner of the district and co-chaired by the designated RA with various other stakeholders. This committee basically will be responsible to prepare a district export action plan, which hereafter we will refer as a plan, in collaboration with relevant stakeholders. They will identify and address the bottleneck for exporting. They will support local exporters or manufacturers to scale up their production and even help in identifying potential buyers export outside India. Now, DGFT will have to develop an online monitoring portal to enable the states, DGFT RS to upload all information relating to the product or services with export potential of every district. The portal will facilitate monitoring the progress of the plan and the committee meetings at the district level. Training, dissemination of information through outreach activities, including buyer, seller, meet, trade fairs, workshop, etc., may be provided in the district for export promotion. Now, this is relatively a longish plan where a couple of years will be, involved for the committee to work, devise a plan and implement. However, the fruits of the export boost for the district will be right over a period of years. Chapter 4, which pertains to duty exemption and remission schemes. The chapter is largely same as the previous policy with sub changes in the processes. So what constitutes duty exemption scheme are advance authorization and duty-free import authorization. Basically, these schemes permit the license holder to procure goods domestically or imported without payment of duty, subject to they exporting the finished goods. And duty remission schemes are typically your duty drawback scheme, which is administered by Department of Revenue, ROSCTL, which is notified by Ministry of Finance, and road tax. Under the current policy, ROSL scheme, which was earlier repealed or phased out in the previous policy in 2019 has been omitted, and rightly so. The ROSL scheme was, repealed or taken over by ROSCTL scheme in the previous policy. ROSL scheme still continues. ROSL scheme used to provide, incentives of state VAT and state taxes. And with the introduction of GST in 2017, most of the inputs and raw material were not subject to state VAT, and therefore the scheme was rightly phased out in the previous policy. Another welcome step is application fee for this remissions and exemption schemes have been reduced to for MSME users. Minimum value addition prescribed for advance authorization is 15%, which is same as under the previous policy, and enhanced value addition of 25% in cases of spices. Self-ratification scheme for fixation of input-output norms have undergone a change under the policy, and that changes are favorable. So where there is no SION, standard input-output norm available, or valid ad hoc norms for an export product, or where SION has been notified, but exporter intends to use additional inputs in the manufacturing process. And here, mind well, additional inputs would mean inputs not in terms of quantity or value, but some different input. So just to give you an example, suppose for a product, a SION has been prescribed and it provides raw material X and Y for the usage. And there is a manufacturer who, in addition to this raw material X and Y, wants to procure a material Z. Then he can procure this on self-declaration and ratification basis. And who are eligible for this scheme? An AEO holder or a status holder of 2-star or above who has applied for EEO status can apply for this self-ratification. This scheme will not provide the benefit of self-declaration or ratification for importation in case of items which have BCD more than 30%. Actual user condition for AEO has been relaxed in the sense that it can be now substantiated through their self-declaration. In case of application or submission of documents for fixation of ad hoc norms or standardization of norms, now the procedure will only be online, so physical forms have been done away with. An additional obligation has been casted on the advance authorization holders, whereby now they would be required for the preservation of records or documents substantiating consumption and utilization of duty-free imported or domestically procured inputs as an advance authorization holder or as a supporting manufacturer for a period of 3 years from the date of export obligation discharge certificate. So previously there was no such condition prescribed. Now the records will have to be preserved for 3 years from the date of EODC. Again, a change has been made whereby no representation against the decision of the norm committee will be entertained after a period of 12 months from the date of uploading of the decision on the DGFT portal. Earlier, there was no such time limits prescribed, and therefore one will have to be cautious in this case that if a license holder or an exporter has an apprehension or disagreement towards the norm being ratified, then he has to make a representation immediately because a time limit of 12 months has now been prescribed. Advance authorization will specify validity period of import and export, will provide validity period of import and EO period. This is more towards ease of doing business and to come out of any ambiguity or litigation where the authorization itself will provide the period of import, permissible period for imports and the subsequent EO period. There was a timeline for extension by the authorization holder. That timeline under the previous policy was 2 months. Now the application for extension can be made with an extended period. Now the period is 6 months. However, failure to making of such application of extension within 6 months may result to issuance of show cause notice under FTDR Act by the regional authority. Earlier, if you are aware that under the scheme, EODC linking was required to be done online for all the exports done. And this linking was to be done on a quarterly basis period. Now this timeline has been removed and you can do it at any point of time. There is another change which is adverse side, where if the value addition falls below the minimum prescribed. So as we have seen that in case of advance authorization, a minimum value addition prescribed for other than spices is 15%. Now say if that value addition of 15% is not achieved, meaning thereby if value addition of holder is done by of 10% only, then that delta or difference 5% will be subject to a deposit of amount equal to 3% of shortfall in FOB value. So earlier this was 1%, now it has been increased to 3%. Chapter 5, which is EPCG scheme, it again remains the same and in structure and intact. And as mentioned previously, that this scheme had an apprehension since being not compliant with the ruling of the WTO dispute panel that it may continue or not. But fortunately, the scheme has continued. The government of India has continued this scheme. And there are too many changes made under this scheme. And if one weighs these changes, comparing it with previous policy, that whether they are favorable or they are adverse, then in my view, it weighs more towards the adverse side. But having said that, the scheme itself has continued, and even with the modification, it is a great sigh of relief for the industry and the trade. So the changes now, EPCG scheme shall not be available for goods imported under project imports. As you are aware, project imports provides a concessional tariff rate. Currently, the general project import rate of BCD is 10%. Prior to 1st May 2022, it is currently 7.5%. And prior to 1st May 2022, it was 10%. So typically what an importer used to do, that he used to import the goods under project import with such relaxed or concessional rate, and also opt for a EPCG scheme where actually he would not be required to pay any duties on procurement. However, the export obligation was computed on such concessional rate, leading towards a reduced export obligation. Now this has been done away with. The goods can be imported under EPCG scheme, which are eligible, but cannot be clubbed with project imports. Another change which would hit the industry is post-export EPCG duty script has been omitted. Now, typically what is post-export EPCG duty script is that an EPCG holder would import or procure the goods domestically on payment of applicable duties and taxes. Yes, he would pay the duties and taxes and then procure. He will thereafter fulfill the export obligation, and on fulfilling export obligation, he used to get transferable duty scripts. Now this has been done away with. And what is the ramification is for MSMEs or a new industrial setup who has not tested its export potential, or the industry where the demand for the export is seasonal or completely dependent on the condition of a specific region. So there used to prevail, where there are cases where there used to prevail uncertainty of fulfilling the export obligation. Such exporter used to take the benefit of post-export EPCG duty script. Now they would not be eligible to such benefit, and if they are not able to fulfill the export obligation, they would end up paying duty along with interest. So this interest would come as a hit, which earlier was absolved. Enabling provisions have been made under the EPCG scheme to refer to export obligation over and above average export obligation. So though the specific provision has been inserted earlier, this used to come from the reading of the policy in general, and the industry and the consulting one was aligned on the computation of EO and average export obligation. The computation remains the same, whereby the average export obligation is calculated for preceding 3 years of average turnover for before or preceding to the year in which the license is obtained for same or similar product. That is termed as average export obligation, and the license holder has to maintain this average export obligation till the export obligation is discharged, and any exports which are over and above this average export obligation, they will be considered for the computation towards export obligation discharge. The validity period of EPCG authorization has been increased from 18 months to 24 months. Import of capital goods shall be subject to actual user condition till export obligation is completed and EODC is discharged. The word and EODC is granted has been added under the policy, which was missing under the previous policy. But EPCG is an old scheme, and practically the industry had adopted a position that they used to dispose of their capital goods only after an EODC was granted and an NOC from customs was obtained to avoid any dispute or litigation. Now the policy specifically provides for this. Realization of Indian rupees towards export will be considered towards discharge of export obligation. So the word Indian rupees have been added in addition to convertible foreign currency. These Indian rupees have to be received as per the RBI guidelines from the balances in the designated special Vastro account. An addition has again been made under the policy vis-a-vis previous policy to provide that an EPCG holder will be entitled to any one of the following four benefits, meaning thereby even if he is qualifying for more than one benefit, still he would be entitled to choose and opt only for one benefit. And these benefits are typically towards reduced export obligation, whereby if indigenous capital goods are procured, then there is a reduced EO of 75%. Similarly, if an importer is able to fulfill an early export obligation within 3 years of import or a lesser time period, then again a 75% of export obligation is there. For green technology product, again a 75% export obligation. And there is a reduced EO for Northeast regions and Union territories of Jammu and Kashmir and Ladakh, whereby there is a reduced EO of 25%. Several changes have been made under timelines and composition fee or late fee for EO extension. And these are important changes. We have captured these changes into 3 baskets for sake of understanding it simply. So first we will discuss the timeline for extension of EO period of the first block. So in the previous policy, there was no timeline prescribed for making an application for extension of EO period of the first block. The current policy provides a timeline for 6 months. Further, there are changes being made under the late fees that in addition to composition fee of 2% on duty saved amount proportionate to unfulfilled portion of EO period to the block, late fee shall be payable. So up till 6 months, there shall be no late fee. Beyond 6 months and up till 6 years, there shall be a late fee of 10,000. Beyond 6 years, late fee of 10,000 plus additional late fee of INR 5,000 for each period per authorization. And what happens if the EO period is not extended? Then the license holder will be liable to pay the applicable duties along with interest within a period of 6 months from the expiry of the EO period of the first block. Now, extension of EO period in general. So, the current policy as well as the earlier policy both provides 2 extensions from the date of expiry of 1 year each for the EO period. However, an option has been removed under the current policy which was available under the previous policy, and if one refers to these changes, then these changes are acting favorable as well as adverse depending on the export potential of the license holder. So for this, we first need to understand what were the options under the previous policy. So the 2 extensions from the date of expiry of 1 year each were provided under the previous policy, where option 1 was on payment of composition fee of 5% and 10% respectively for each of the year of proportionate duty amount saved on unfulfilled export obligation for each year of expenditure. This was option 1. And option 2, which was available for the EPCG holder, was that he could save away himself from paying any composition fee by taking an enhanced export obligation of 10% and 20% each during each of the extension period of the total export obligation, and he could have got this extension of time period. Now, under the current policy, as a welcome measure is that the composition fee has been reduced to 2% of proportionate duty saved amount on unfulfilled export obligation for each year of extension compared to previous policy of 5% and 10%. So there is 2% for each year, which is a reduced 2 and 4% now, which is a reduced value. So this is a welcome measure. But what happens if an exporter or the license holder has a potential to take an enhanced export obligation and fulfill it without payment of composition fee? That has now been removed from the policy. And interestingly, one should note that these changes have been made applicable even to licenses or authorization which were issued under the previous policy. And therefore, we feel that this could be an area of litigation, because a license holder can easily claim that when the license was issued to him, he at that point of time has option to take an enhanced export obligation without payment of composition fee, which is subsequently being removed. Now, timeline for application for EO extension and its corresponding late fees have been amended. We have tried to tabulate the same, which is on your screen. You may refer to that quickly. A paperless application for EO discharge has been put into place. A common service provider will be eligible for EPCG scheme. Now, what is a common service provider? A common service provider is subject to a certification, that someone who gets certified by DGFT headquarters, which is nothing but DGFT or Department of Commerce, and he is in town of export excellence, or he is in Prime Minister Mega Integrated Textile Regional and Apparel Park, then he will be eligible to EPCG. Now, to just give you a simple example to understand who could be a CSP is taking an example of a apparel park. So there is this apparel park or a textile region. Let us take an example of textile region where there are several manufacturers of garments, and there the CSP is providing the services of embroidery on this garment. So out of this several, few garment manufacturers avail the services of the CSP for embroidery of the garment, and they finally export such garment. In such cases, such service provider would be termed as CSP, subject to the certifications and his location, and he will be eligible to EPCG benefit. However, it has to be kept in mind that infrastructure or utility services like electricity, water, gas, sanitation, sewerage, telecommunication, transportation are not considered for the benefit of CSP. And the capital goods, as I mentioned earlier, should be installed within T or PM Mitra. The list of green technology product has been broadbanded. Basically, green technology product have a reduced export obligation. So now it has been broadbanded. Now products such as battery electric vehicles, LED lights, vertical framing equipment, wastewater treatment and recycling, rainwater harvesting system, and rainwater filters and green hydrogens are added to the list, and they will enjoy this benefit. Now, policy has specifically introduced a provision for an option to surrender the unutilized authorization, and it says that no penalty or fee shall be levied. Now, though this has been implemented in this policy, but EPCG has typically been an old scheme, and previously also industry and trade used to surrender the unutilized authorization, and there was no fee applicable at that point of time also. And provisions have been made regarding procedure with respect to procurement of capital goods under the EPCG scheme from an SEZ. Application fee again for an EPCG scheme has been reduced for MSME. An annual report regarding fulfillment of EO was required to be submitted in case of EPCG holders. The date was 30th April. Now in the new policy, this has been extended and the revised date is 30th June. This is an online filing. Further, the new policy prescribes for regularization in case of default of such filing by a late fee of 5,000 per year for each authorization. So one will have to be cautious. If the timeline is missed, then there shall be a late fee of 5,000 implication. One-time settlement of Amnesty scheme has been introduced, which provides for settlement of defaulting export obligation by advance authorization and EPCG holders. And this is with effect from 1st April. The coverage of the scheme is the scheme covers policy period 2009-14 and prior to that. So after policies after 9-14 are not covered. And for 9-14, an advance authorization and EPCG license issued up to 31st March 2015 could qualify under the policy. And similarly for policy of 2004-2009 and prior to that, any advance authorization or EPCG license issued where EO period, whether original or extended, was valid up to 12th August is covered. scheme would cover cases which are adjudicated or in appeal, meaning thereby they are still pending adjudication. However, exclude cases under investigation or cases adjudicated or for involving fraud, misdeclaration, or unauthorized diversion of material and or capital goods. Benefit under the scheme is not applicable if duties and interests are already paid in full before registration under this scheme. Now, what is the payment and the relief? All exempted duties are to be paid, of course, BCD, ACD, etc. However, the interest in this case will be till the date of payment, which has been capped to 100% of the exempted duties. Further, no interest is payable on the portion of additional customs duties and special additional customs duties. One can refer to the, they have provided illustrations which are well crafted and drafted under the public notice to understand the computation under the scheme. So one will have to register or make an application for the scheme on DGFT website before 30th June. The applicable duties and interest have to be paid to the jurisdictional customs authority on or before 30th September 2023. And in case where there is a partial default in EO obligation, the RA upon specific request and application shall intimate the duty and interest payable to the applicant. The applicant can then pay the same duty and interest to the jurisdictional customs authority and submit proof of payment to the regional authority. Here it is pertinent to note that for the amount which has been, the duty which has been paid, no refund or credit will be allowed under any law. And an undertaking to this effect has to be provided in the scheme, which becomes part of the application. And based on evidence of payment of duty and interest along with the relevant documents, the concerned RA will issue the EODs. Coming to chapter 6, which is EOU, ESTP, STP, and BTP. Now this chapter, largely remains same, and very few changes have been made in terms of conditions and processes, which we will understand. So EOU, ESTP, STP, BTA units may export through other BTP units also. So in the previous policy, and EOU, ESTP, STP, BTP units were permitted to export through other EOU, ESTP, STP units, and even for that say SEZ units. But for reasons unknown, BTP units was a part of exclusion or not a part of inclusion. Now BTP has been made to the list of inclusion. A change has been made in case of an EPCG authorization holder who is into a DTA unit and looking for conversion of its DTA unit to EOU, ESTP, STP, BTP, where in such case the holder will be required to pay the applicable duties, or he will have to get the EODC, then he can go for the conversion. Another amendment has been made to provide that in case of goods or parts which are being imported or procured indigenously are found defective or unfit for use or have been damaged or become defective subsequently. Earlier there were two options, which was replacement or destruction. Now, in addition to the earlier two options, one more option has been provided, which is return of goods against refund of purchase value provided. HBP providing provisions regarding revival of sick units have been deleted. Deemed export, the chapter largely remains the same, where only two mentions from my side. A para has been deleted, which implies that deemed export benefit on supply of fuel to specified project listed for petroleum fuel operation under notification 50/2017 customs, which we call as a general exemption notification, shall not now be available. Further, the objective of the chapter has been amended to specify Can you please mute it? Yeah, chapter 3, I will quickly take you through chapter 3, which is quality complaint and trade dispute. This was present earlier also. The current or the earlier committee on quality complaints continues to be there along with relevant RA to regulate this and look at this. And what this typically provides, that it provides for a mechanism to address quality complaint and dispute concerning unethical commercial dealings between Indian and foreign parties. So here it is pertinent to note that the scope of inclusion is only where there is one Indian party and there is another foreign party. In case there are 2 Indian parties or 2 foreign parties, then it will not be entertained under this forum or will not be subject to this forum. The current digital platform will continue to be retained and used. The addition has been made to the scope of this quality control and trade dispute. Earlier, it was only covering goods, supply of goods. Now it will cover supply of services and technology as well. I will just give you a quick brief due to paucity of time. A new chapter promoting cross-border trade in digital technology has been improved. The chapter, identifies and defines e-commerce export of goods, e-commerce export of services, e-commerce platform. Further, the current Niryat Bandhu scheme have been added with a component for promotion of e-commerce and other emerging channels of export by way of organizing outreach activities. E-commerce export hubs will be set up as center for favorable business infrastructures and facility for cross-border e-commerce activities. These will be ordinary through private initiative. It may also be set up in public-private partnership. The ECEH will provide, services like storage, packaging, labeling, certification, testing, and other common facilities for the purposes of export. Another important change is Dagdar Niryat Kendras to be set out throughout the country to work in a hub and spoke model with foreign post offices to facilitate cross-border e-commerce and enable artisans, weavers, craftsmen, MSMEs in the hinterland and landlocked regions to reach international market. Suitable IT system enablement and various incentives will be looked at. Regarding SCOMET, I just want to make one mention that SCOMET was earlier the part of policy since years. It were part under different chapters as part of FTP, under Handbook of Procedures, under ITCHS. Now it has been streamlined and a separate chapter has been done, which is an alignment to the policy. SCOMET is an acronym for Special Chemicals, Organisms, Material Equipments and Technologies. And India is, signatory to several international conventions which regulates this item, and therefore this finds an importance. Now, why this has to be regulated? Because SCOMET items generally have dual use. They have a civilian or an industrial use as well as military use, and could be even weapons of mass destruction, and therefore they are regulated. As a last slide to discuss, there are other points which focuses on ease on doing business. And the main point which I would like to refer is the table where they are saying that an automatic route for exporters will be enabled for permissions, the different types of permissions for giving a license as well as revalidation or extension. The current processing time and the proposed time has been given. Though we see that the current processing time, they have said that it is 3 days to 1 month, but we have seen it extended to 1 month to 6 months. But however, once this has been put under the policy, it shows that the government's apprehension is to make it workable, and one will have to see how it pans out at a ground level, the implementation at the ground level. Further, another important thing is a lot of fee has been reduced for MSMEs, which we have tabulated here. With this, we can now, open up for the Q&A round.
Yes, sure. Vaibhavji, let's see the questions if you have received. Dear members, if there are any questions, please send it through your chat box.
Sir, under chat box, there are no questions as of now.
Yes, under chat box, there are no questions, but we have 2-3 platforms. So
yes,
let me check on that.
Payal ji, 1 second. Payal ji, 1 second, sir, just we are checking, sir. Get back to it. Give me 1 minute.
Meanwhile, our second faculty, senior advocate Tushar Bhai Hemani, and my co-moderator, C. Dr. Anjali Choksi, has also joined.
Good morning, Anjay ma'am.
Good morning, Vaibhav bhai. Good morning, Tushar bhai, CCM Purushottam bhai, Sunil bhai.
Good morning.
Good morning, everyone.
For 2 minutes, for if the questions are there, then after, if there are no questions, we will hand over to you.
Good morning, Tushar bhai.
Vaibhavji, one thing is there that kindly enlighten status of focus license and MEIS scripts under FTP 2023.
So the focus license had been abolished quite earlier. It was phased out. And MEI scripts and SEI script, as I mentioned in the start of the presentation, it became part of Chapter 3, which was Export from India scheme. And this schemes under the previous policy itself were phased out. And therefore, under the current policy, even the chapter has been omitted, meaning thereby there are no such schemes as on date under the current policy. I hope this addresses your question clearly.
Okay, sir. It seems there are no other questions.
Yes, sir. There is no other question, sir.
Yeah. Yes. So, on behalf of ICI CP committee, I am thankful to you, CA Vaibhav Jajuji, for sparing the time.
My pleasure.
And try to see you in future. And it was really a nice deliberation and different timelines under FTP and the relaxation amnesty scheme that you have discussed. And now, one more thing, that participants that when we joined, it was 650, as I told you earlier. Now it is nearly 900 participants are there on the different platform who joined this event. Now I would request CA Dr. Anjali Choksi to take the session further.
Thank you, my co-moderator and the vice chairperson at Ahmedabad branch. Once again, I welcome all the wonderful 900 participants here under the leadership of our CCM, C. Purushottam Khandelwal, the star, the rock star, our favorite of Ahmedabad branch, C.A. Tushar Hemani. He does not need any introduction in India. We are proud that he belongs to Ahmedabad. He is the favorite at Ahmedabad branch, and it's my pleasure to introduce him. He is a senior advocate and has successfully argued complex matters relating to direct and indirect tax, corporate laws, commercial and fiscal laws before Supreme Court, High Court, tribunals, commission and various appellate authorities. Proud to say that he was one of the youngest at bar to have been conferred the senior designation by the Gujarat High Court in 2019. He was the past president of Income Tax Appellate Tribunal Bar Association, Ahmedabad, for the term 15-17. A regular speaker at various conferences, seminars, including Ahmedabad branch, valuable and always available for Ahmedabad branch, and a very esteemed faculty. And I'm fortunate that today we are there with him, and I request Tushar Hemani to take the session ahead. The overwhelming response is received for one of the favorite topic and the hot burning topic in India. Over to you, Tusharji.
Thank you, Anjali Ben, for the nice words. I don't know to what extent I deserve those words, but then thank you anyways. Friends, the controversy today is very, very interesting. But let me at the outset confess that I never knew that we have so many political donors in the country. I thought this is a concept only prevalent in the Western countries, but I am very happy to share that we have so many political donors in our country. So I believe that politics in the days to come is in the secured hands because the citizens are taking equal participation in the political movement. That said, let me at the outset thank all the organizers, including Purushottam Bhai, Anjali Ben and Sunil Bhai, for inviting me over to this platform to share some of my views on the topic. With this, friends, let me start the presentation. If I can be allowed to share the screen.
Yes, sir.
Slide is visible?
Yes. Yes, sir. Yes, sir.
All right. Let us start with this. What I propose to do is in the next probably 50 minutes, I'll be taking you over to the controversy on the issue. The controversy is political donations. Before we start the actual discussion, I would also like to share what is it that is now available with the Income Tax Department that has changed the scene altogether. Once we discuss the factual issues, then we'll go to the law on the subject and on the issues as regards how do we deal with this problem in days to come. Let us look at the scene, the factual scenario so far. Why suddenly such a controversy? Because all of us are aware that political donation sections were there in the statute book since quite some time. And even the political party also enjoys exemption on their total income, provided subject to fulfillment of certain conditions. So what is it that has happened now so as to rake up this controversy in such a large volume? There was a search on 7th September 2022 on the RUPS group of Ahmedabad. It is known as RUPS. RUPS is Recognized Unregistered Political Parties. So recognized unregistered political parties are the political parties which has never fought any election. These are all the political parties registered with the Election Commission of India, and they fulfill all the legal and or procedural requirements. However, the fact of the matter is they have not fought a single election so far, and that is why they are unrecognized. Parties which has fought an election, which has contested an election, are falling under a different category. They are RRPPs, that are recognized registered political parties. So we are concerned purely with RUPS. We will be addressing it as RUPS. RUP is that is registered, recognized unregistered political parties. So there was a search at Ahmedabad broadly, and again other parts of the country as well. 23 RUPs were covered under that search on 7th September 2022. On the search on these 23 entities, it was found out that there are in all 35 bogus intermediary entities, and there were few major exit providers. All were connected with all this RUPS group, which were covered under the search and seizure action on 7th September 2022 by the Income Tax Department. During the course of the search, what the Income Tax Department found was that all these political parties, prima facie, again, this is the case of the department, not necessarily the correct facts, but nonetheless, we have to consider these factual aspects before reaching to any conclusion. As per the Income Tax Department, all these 23 RUPs were bogus political parties. They were all operating accommodation entry providing machine. What they were doing was that in the guise of running political parties, they would collect donations. These donations would be collected from large number of citizens. These donations generally would be routed through banking channels, check, RTGS, NEFT transfers, and so on and so forth. So all monies would flow into the political parties through the proper banking channel. These monies in turn would be in the books of the political parties, would be shown to have been spent on various political purposes. This money in turn would be routed through all these 35 bogus intermediary entities, which would receive the money from the political parties in the guise of, in the books of the political parties, this would be treated as expenditure incurred for the purpose of promoting the political agendas. And in the hands of the recipient 35 bogus intermediary entities, this would be shown as a receipt. Against these receipts, the entities would show certain bogus expenditure, which in turn would be paid to another layer of connected concerns, in turn would be paid to second layer of connected concerns, so on and so forth. Ultimately, in the guise of booking this bogus expenditure, the banking money, the check money would be converted into cash. Now that cash would be handed over to the exit providers. Exit providers are the entities which would, according to the Income Tax Department, would return the cash. They would handle the movement of cash. They would return the cash to the person who have originally donated the money. So as against a donation of, let's say, rupees 100, cash would be given back, would be returned anywhere in the sum of rupees 93 to 99.50 paisa. The amount which is deducted would be the commission income, which is shared by all the connected entities. And all these entities would thus run a racket whereby a donation which is received in check would be returned back in cash. So the whole idea is to claim the donation as an allowable deduction under section 80 GGB or C as the case may be, and convert that donation into cash, which would again be returned back to the donors. Donors would then thereafter enjoy the cash in whatever manner they deem appropriate. However, they would generate some commission out of this, and that is their motivation for the purpose of running this racket. Now, this was the information and this was the genesis. In the search, we also find, after going through the appraisal report, we also find that the Income Tax Department has covered large number of professionals also. According to the Income Tax Department, this racket was going on, and some professionals, including tax consultants, tax advocates, chartered accountants, income tax practitioners, many such professionals were also involved in promoting this kind of activities, and they were also covered. Their WhatsApp chats, their email accounts, their cloud-based data, everything is now with the Income Tax Department. Based on that, in the appraisal report, they have mentioned that we have also covered many professionals, and they have found certain incriminating WhatsApp chats wherein the factum of giving the RTGS details, namely donors' RTGS details or donors' payment of donation details, were forwarded to the exit providers. And those exit providers in turn have also sent messages to the professionals that they have sent the cash through various shroffs, angadiyas, and other such intermediaries back to the chartered accountants, tax consultant, or the donors. So these incriminating WhatsApp chats on a case-to-case basis is also available with the department. Because of all this, and because of ultimately appraisal report was prepared wherein remedial actions were suggested in the hands of all these donors. And because of these remedial measures, Income Tax Department has started issuing the notices for reopening for assessment year 1920 broadly at this stage, because 1920, all of us are aware, under the new 148 regime, under the new reopening regime, 3 years, up to 3 years, except for escapement, and that to an allegation of escapement, nothing, no other checks and balances are available in the statute book, and therefore without fulfilling any other requirement, Income Tax Department, based only on the information which they have received from the investigation wing, they started issuing the notices. And all those notices have been received by the various donors probably before 31st of March. And in case after 31st of March, again, we'll discuss in a short while from now. And therefore, all this action, the sudden action in the hands of all the political donors, are now the burning issue as to what is the way forward. Because what SSs at large are finding is, broadly, their case is that, sir, we did not know what is going on. We just gave a donation. At the time of giving the donation, those political parties were having a valid registration. Those political parties were properly formed and they were fulfilling all the legal requirements. Based on that, we claim deduction under section 80 GGB or C as the case may be. If at a later stage, a search is conducted and certain actions are taken against these political parties, then what is our fault? And therefore, in our hands, the deduction that we have claimed may be treated as a genuine deduction. And that is broadly the controversy. Let us look at, again, certain more incriminating facts. In the appraisal report that we come across, we find that there is a confession by all the key persons of all these groups. What they have done is they have recorded the statements during the course of the search of all the managers, namely the chairman, secretary, the CEOs of all these political parties, and they have, all of them have unanimously and unequivocally confessed of having run a bogus entity. Their statements are available. In fact, in the appraisal report that I have come across, statements of only few such persons are reproduced. However, I am told that there are a large number of such statements, and wherein the confession is that the entire exercise was to provide accommodation entries, was to convert check money into cash money in the hands of the donors. And these are all the entities which are bogus in nature. They do not exist. As a matter of fact, they do not even carry on any political activities, to say the least. And therefore, these statements again are available with the department, wherein this fact is very categorically coming out. The books of accounts of all these bogus political parties were found out. They were found to be bogus and fabricated and completely unreliable. Department has gone to the extent of even examining one of the beneficiaries, because I could lay my hands on statement of one of the beneficiaries who has allegedly confessed that yes, he has, when he gave the donation in check, he has received the cash money back in his hand. And this was after deduction of the commission, etc. And there was a confession to that effect also available. However, this statement was not part of the search. It was a post-search inquiry. And therefore, the statement was recorded under 131 as against 132(4) of the Income Tax Act. Having now gone through the factual background, because it is very necessary to understand what are the evidences which are available with the Income Tax Department before we go to the next stage. Having understood the severity of the problem, having understood the facts, and having gone through the details, evidences, and statements which are available with the Income Tax Department, the next stage is to understand the statutory scheme, that how this deduction is made available. What is political donation? Political donation, we have two sections. Section 80 GGB is for non-individuals, broadly for companies. 80 GGC is for individuals. More or less, the language of both the sections is the same. We can look at the language of those sections. What are the conditions for the purpose of claiming 80 GGB? 80 GGB is that while computing the total income of an SSE, in case of a company, because this is more to do with a corporate entity, there will be a deduction of the amount which is given to political party or electoral trust. Once we have the receipt of a political party saying that this deduction is eligible for 80 GGB, that receipt itself would have the information which are required for the purpose of claiming this deduction, namely the registration details of the political party. And once that receipt is produced, you can claim the deduction. The proviso only talks about not giving deduction insofar as cash deduction is concerned. So the moment there is a deduction claimed for the contribution which is given in cash, the proviso would come into play and it will end up in disallowing this deduction. Other than this, namely cash contribution, there is no other condition which is required to be fulfilled by the donor of the donor in question. Contribute has a large meaning. So cash and kind, both kinds of contribution are covered under political donation. And for that, we can go to 293A of the Companies Act. Mind you, this is the old Companies Act where the reference is of 1956 Act and not 2013 Act. 80GGC, again, of the same nature. Here also cash is something cannot be claimed as an allowable deduction if the contribution is by way of cash. Other than that, no other condition. The moment you produce the certificate of 80GGB or C, as the case may be, you claim the deduction. Here, explanation says that for the purpose of both 80GGB and 80GGC, political party means political party registered under 29A of the Representation of People's Act 1951. Now, this registration number is already printed on the receipt book, which is there. So once we do that, in the hands of the donor, the obligations are fulfilled. Then comes what is the issue in the hands of the political party. After having received this donation, what are the conditions which are required to be fulfilled by the political party so that they can claim exemption under Section 13 capital A on the entire contribution that they receive from all these donors. So the political party has to fulfill the conditions which are enumerated under section 13A. We are frankly not concerned with those conditions for the time being. However, once these conditions are fulfilled along with the recurring requirement, and that recurring requirement is with respect to filing form number 24A, wherein the details of all the contribution received by all such political parties as prescribed under various rules are given. Of course, the donation in excess of 20,000 rupees is only required to be furnished in form number 24A. The reason why this is important is that for the purpose of claiming exemption under 13A, because all this contribution would otherwise constitute income from other sources in the hands of the political parties. And therefore, in order not to be taxed under those sections, in order not to offer entire contribution as taxable contribution, the political parties in turn would claim exemption under 13A. For that, they need to give details of contribution. Now, details of contribution in excess of 20,000 is already filed. So all those donors who have given the money to all these political parties, the entire details, namely the name of the donor, their permanent account number, and other all such details, the way in which contribution is paid, the banking details, every such detail would be available with the income tax department based on the details which are furnished by this political party in form number 24A. And therefore, that is more dangerous because it is not something which is flowing from the seized material. Kindly mark, these are all the documents which are filed in the normal course before the authorities, and therefore the income tax department has the knowledge as regards donation, anything in excess of 20,000, all those details are available with the income tax department. Whether it is now processed or in the process, we do not know. If it is already processed, notices are issued. If it is still in the work in progress, then the notices would be issued eventually. And therefore, now coming to the issues. What are the issues which would be now available for the purpose of discussion? Issues are that, number one, what do we do with prior period donations? We know that 1920 notices are issued. However, if earlier years also you have given a donation, can department now issue reopening notices for earlier years period prior to AY 1920? Second would be 1920. What do we do about that? Third would be 2021, because now 2021 would stand on a different footing. Prior to 31st March, it was on a different footing. Now it is on a different footing. And periods after 21-22, because there could be some donors who have regularly supported the political parties, and because they are worried as to the past actions as well as the future from 1920 onwards. So we'll discuss all this in a systematic manner. Let us first pick up the issues with respect to the donations which are given prior to 1920. So supposing if a particular SSC has given donations right from, let's say, 13, 14, 14, 15, and all those years are covered, would he be a worried SSC? Can he be said to be a person who now going to be affected because the department is certainly going to take some action in the hands of that particular SSC? My view is that if the donation is in excess of 50 lakhs of rupees, then only reopening beyond a period of 3 years can take place. So all the years falling prior to 1920, if the amount of donation is less than rupees 50 lakhs, there is no need to worry. And therefore, to the extent small donors, I do not see any problem for the years prior to 1920. However, if you are a person who has given donation in excess of 50 lakhs of rupees, kindly mark here, it's the escape income and not the tax liability. And therefore, donation in excess of 50 lakhs of rupees would be certainly can be reopened if the department has material available with it. However, can that action of reopening for the period prior to 1920 be challenged straightway would depend on the facts of each case. We'll have to find out as to what is the allegation as regards escapement, whether that escapement is proved prima facie tentatively at the time of issuance of notice and passing of order under 148 capital A small d. We can also look into 148 capital A procedural lapses, whether 7 days time is given for the purpose of replying to the notices, whether the reply which you have filed, whether that is considered by the authorities while passing the order under 148 capital A small d. Is there any violation as regards service of 148 A, B notices, or any investigation which is required prior to issuance of notice? Is there any lapse on those aspects that can only be considered and taken into account post issuance of notice under various sections? Therefore, this is one area which we need to remember. Information and source thereof, again, you check if you receive any notices for the period prior to 1920, you find out what is the source of information. You then compare that source of information with explanation 1 to section 148 and decide whether 5 sources which are prescribed under explanation 1, whether the information is falling in one of those sources, one of those heads. If no, then you can challenge even the availability of information and the processing thereof. And then comes 149 1B, because this is a reopening beyond a period of 3 years. And therefore, you will have to ask the department as to in what manner they are satisfying the conditions which are prescribed under 149 1B. You will have to ask the department that do they have any material, namely documents, books of accounts, or other evidences available with the assessing officer. Kindly mark the word, the material, that is documents, evidences, and books of accounts must be available with the AO and not with the investigation wing. Based on this availability of material, is there any allegation of escapement of income? If so, that escapement of income is represented in the form of any asset, expenditure, and a book entry. If so, then it is in excess of 50 lakhs of rupees. So these are the broad heads under which you can challenge this action. Supposing someone might argue that, sir, I'm a salaried employee. I do not maintain the books of accounts. And therefore, any amount of donation is not reflected in the books of accounts. Can I be again covered under the 149 1B? Department might argue that, sir, you are claiming this as an expenditure, and therefore it is falling under the head expenditure, and therefore we don't have to even frankly go to the books of accounts. Even otherwise, courts have taken the view that bank statement is also books of accounts. In some cases, courts have taken a contrary view, and therefore we still can get access by invoking those two provisions. SSC might argue that, sir, these are expenditure which is talked about under 149 is only with respect to a transaction. This is not an expenditure with respect to a transaction, and that transaction also is with respect to an event or occasion. Someone might argue that this is neither an event nor an occasion, and therefore this is not an expenditure as contemplated under 149 1B, so on and so forth. These are all the arguments which can be raised only upon some action being taken by the department. Today, we are all anticipating that some action would be taken, and we are also probing in the dark as regards the probable defenses. And lastly, once you receive the notice, you can also challenge the notices on the ground of sanction if it is sanctioned by the appropriate authority as prescribed under the section. If it is beyond 3 years, then sanction of a higher authority and the application of mind while granting the sanction. So these are all the possible defenses which one can raise depending upon the fact that in what manner the notices are issued and my objections are dealt with. This is insofar as years prior to 1920 are concerned. Now coming to 1920. 1920 is probably the year which is causing a lot of heartburns today. 1920, I have shared with you on the screen a draft notice. These are all kinds of notices, a sample notice which is now received by large number of SSC across the country. And the proceedings have been set into motion. And these are all the assessments which are already open today. And therefore, if you look at these notices, you would find that they only say that on the basis of the information available with this office, a donation of rupees so and so, so and so, so and so. Therefore, the first question which would arise would be that what is the notice? What is the source of this information? Whether this source of information, they have not specified in the draft notice which I have shared. They said that on the basis of the information available. They don't say that this is available on the inside portal, whether it is information which is falling within the parameters of risk management strategy formed by the CBDT. They are not sharing any of those things. And therefore, one can raise those issues that what is the source of this information, whether it is falling within the risk management parameters set by the CBDT. Because so far, we have not seen what are the risk management strategies formulated by CBDT from time to time. And therefore, one can challenge the validity of this information on the basis of touchstone of explanation 1 to 148. Then a second interesting issue which would rise would be that in some cases, people have received the notices in the first week of April or even second week of April. So what is the law on the issue? The law on the issue is that notices are required to be issued by 31st of March so that they can be said to have been issued within a period of 3 years. And therefore, they would stand on a different footing. Now, can someone argue that, sir, my notice is received or issued itself on the 1st of April or 5th of April. Therefore, that notice is now issued beyond a period of 3 years from the end of the relevant assessment year. We are concerned with 1920. So 3 years would lapse on 31st March 20. So anything received in the first week of April 23 is beyond a period of 3 years. Here, you'll have to take into consideration the third proviso to 149. That third proviso broadly says that the period where 148 capital S small b notice is issued and the time given to SSA to file his response are required to be, that time is required to be excluded for the purpose of computing the limitation period. So also the last proviso to 149 says that in case if after the reply is filed, the department has less than 7 days to pass order under 148 capital S small d, D as in Delhi order, then it will be extended to minimum 7 days in the hands of the department so that they can pass the appropriate order. So both ways, namely the exclusion of the time which is given to an SSE for the purpose of responding and any extension thereof. So originally, if the notice is issued on 25th of March and you are asked to file the response by 28th of March, you can straightway say that, sir, my notice is illegal because I am granted less than 7 days time for the purpose of responding. Supposing you do not do that and you file your response on 28th of March, then 3 days which is given to you from 25th to 28th would be excluded from the date on which the order is passed. So supposing order is passed on 1st of April, then you will have to exclude 3 days from the purview of that order, and therefore that order would be considered as having been issued in time, and therefore you cannot probably challenge it. However, if you find that original notice was issued on 20th of March, you were granted 7 days time till 27th, you filed your response on 27th itself, and thereafter the order is passed on, let's say, 12th of April. Can you say that this is an order passed beyond a period of 3 years? My answer is yes. Then it can be said that the order is passed beyond a period of 3 days, beyond a period of 3 years, and therefore it is not a valid order so long as it is not passed within a period of 3 years. Therefore, the department has to now satisfy the criteria of 149(1)(b) instead of 149(1)(a), where there are hardly any criteria. And therefore, the 50 lakhs rider would come, the asset expenditure book entry rider would come, and all other conditions which are prescribed under clause B of 149(1) would come into service. So therefore, you'll have to find out the dates, remove the dates which I have indicated, and thereafter compute whether it is issued within a period of 3 years or no. If it is done within a period of 3 years, you'll have to thereafter go to the next point. You find out whether it is duly sanctioned. Now, sanction, the law on the issue is that it has to be done as a condition precedent to issuance of notice. So any order which is any notice and consequential order issued without proper sanction is no order in the eye of law. Therefore, you can say that sanction, if it is not there, very well. If it is there, then the next question is it issued? The sanction is granted after due application of mind or without any application of mind. Again, the law here is very, very subjective, because the courts have taken the view that even I agree with the findings of AO is also in a given case be said to be considered as an application of mind, because Gujarat High Court in some of the cases have taken a view that if assessing officer has given proper reasoning, then it is not obligatory on the part of the sanctioning authority to give fresh reasoning. They can simply agree with whatever has been stated by the assessing officer, and in such a circumstances, sanction can be said to have been given after due application of mind. Therefore, again, the application of mind is one issue which is highly subjective and would depend on the facts of each case. That would take me to the last defense, that is escapement, whether this situation as regards claim of excessive allowance can be said to be an escapement of income. Because if you look at explanation 2 under 147, which was there in the statute book prior to 31st March 2021, you would find under explanation 2, clause C, small Roman 4, that excessive allowance itself was considered as a deemed escapement. The very fact that there was a deeming provision means factually that is not the situation. If excess allowance itself was considered as an escapement, there was no requirement for the parliament to enact a deeming provision. Deeming provision means something which is factually not there, you have to presume that it be so. And therefore, the more fact that it is falling, the excessive allowance claimed is falling within explanation 2 itself suggests that it is ordinarily not to be considered as a situation giving rise to escapement of income. If that be so, then one can raise a defense that this is nothing, there is no escapement, and therefore the entire action of income tax department is not correct. Again, it is a very, very adventurous argument. I would ordinarily think that this argument is hyper-technical. If it clicks, it clicks. Otherwise, this is an argument which is highly technical. And the last argument probably is that all these notices are issued by jurisdictional assessing officer. Jurisdictional assessing officer has issued the notices, and therefore one can say that notices now are required to be issued by the faceless authority and not the jurisdictional assessing officer. This argument so far has not been tested before any court of law, and therefore in the times to come, because there is a notification dated 29th March 2022, wherein the view that is taken by the department is that now onwards, henceforth, all the notices under 148 would be issued by the faceless mechanism. Thereafter, I understand there is a change in the stand of the department, and power is specifically given to jurisdictional assessing officer. However, we have not seen any such internal notification or communication, and therefore we can still argue that notices issued by jurisdictional assessing officer is not valid, because the power to issue reopening notices after 31st March 22 is only with the NF, that is National Faceless Assessment Center. That would take me to the law on the issue. What is the law existing today? We have a direct judgment of Ahmedabad bench in the context of EPCG, wherein the view taken by the Ahmedabad bench was that for the purpose of claiming EPCG, what we have to see is that on the date of giving of the donation, whether the political party is recognized or no. If the political party is recognized and the donation is properly given and the factum of transfer of money, etc., is not in doubt insofar as the first leg of the transaction, namely giving of the donation, you cannot deny the donation merely because some action is taken in the hands of the political party, or whether the political party has not utilized the money the way in which it is contemplated under section 13 capital A of the Act. Therefore, in short, what the tribunal says is that merely because political party made a default insofar as compliance to the law is concerned, the donors cannot be faulted with. Supposing, take a case of EPCG trust. If you give donation in the hands of the EPCG trust, and if that trust has a valid recognition, and if that trust does not use the money which you give for the purpose of the betterment or the attainment of the object of the trust, then that would become income of that trust under section 11, and it would not come back haunting you while by denying 80G deduction. The logic is the same, that if there is a default, you find out on whose part the default is and you penalize that person. So the tribunal says that in that case, you go after the political party, raise a demand in the hands of the political party and tax them. You cannot deny this deduction in the hands of the SSE so long as the requirement of the law are fulfilled. The same view is again reiterated by the Supreme Court in the case of Chota Tingrai Tea Estate, original judgment of Guwahati High Court, and confirmed by the Supreme Court in a tax appeal, that is a civil appeal. Therefore, this is a binding judgment of the Supreme Court done in the context of section 35, nonetheless equally applicable in the facts of the present case, that so long as the donation is given, so long as the amount is given and that amount is duly given as per the requirement of the law, the utilization thereof is not a concern of the donor, because I do not have, frankly, control over the way in which donee is using the money. I cannot dictate my terms that, sir, you ask the donee to use the donation in this particular manner, nor do I have control as regards asking for the confirmation from the donee that, sir, the money that I gave to you, you give me a certificate certifying that you have used that donation for so and so purposes. There is no such legal sanctity and there is no such legal enabling provision which can enable a donor to ask for all these details from the donee. And therefore, it is beyond my control. However, in the very same judgment, Guwahati High Court directed that you produce on record the way in which the amount is utilized, whether it is for intended purpose or no. And that additional burden which was cast on the donor ultimately was upheld by the Supreme Court. And therefore, if we extract the correct ratio from the judgment, we are right in our submission that, sir, the moment I give the donation, utilization is beyond my control. However, in the facts of this judgment, there was a direction by the Guwahati High Court and confirmed by the Supreme Court that the utilization of the money is required to be proved. If that burden is now put to me, how do I discharge that burden of proving that the political party to which I gave the donation has utilized the money for which the donation was intended? I cannot now go back to the political party. Even if I can go back to the political party, I know the fate. That political party is going to raise its hand and going to say that, sir, we have not used that money for the intended purposes. And therefore, the correct test, which is laid down by the Supreme Court, would come in my way in claiming this deduction at this stage. Again, in the context of section 35, we have a large number of judgments. In fact, I find that judgments across the country are also on these lines, that for the purpose of section 35, a subsequent cancellation of the registration or any subsequent action taken in the hands of the recipient of the donation, that is in the hands of the donee, would not disentitle me to claim the donation in my hands. And therefore, all those subsequent actions are required to be ignored for the purpose of grant of this donation. Gujarat High Court is there on the issue. However, I am told that all these decisions are now taken into consideration, and Calcutta Tribunal has taken a view which is contrary to this view after considering all the sequence of events. Kindly mark and kindly appreciate one aspect of the matter. In all these judgments, on whether in this line of judgment, that is in the line of 35, or the earlier judgment of ATGGC Ahmedabad Tribunal, as well as the Guwahati and Supreme Court judgment, in none of those judgments, the findings of the department, more particularly the damaging findings of the investigation wing of the department, have come on record. Whereas that is the reason why I started off by describing the facts, and therefore those facts are going to come on record in all this political donation matters. And therefore, those facts have not been taken into consideration in any of this department, that the political parties were searched. All the principal officers of the political party have confessed having run accommodation entry racket. All the intermediaries through which the political party has routed the donation and generated the cash were also considered by the search action. They were also the officers and the principal officers of those intermediary parties were examined. They have confessed having run the accommodation entry racket. Coupled with that, there are a large number of professionals and the recipient. One of the cases of the recipient of the cash, namely the donor, is also covered. And all those facts collectively would be placed before the authorities, and therefore it might assume a different characteristics when it comes to political donation. Then comes the last aspect, that if supposing if 1920 and all other such natural justice would, whether natural justice would come in our support or no. Because the argument is that, sir, 1920 is already reopened. We do not want to challenge that before the court of law. And therefore, the only option is, supposing if you don't challenge that action, 1920, which is already reopened, you don't challenge that action. And therefore, you have to face the assessment proceedings. Therefore, what are the arguments which you can raise before the assessing officer insofar as natural justice is concerned? You can ask for various details, namely the material which is relied upon by the income tax department, in as much as the statements, the bank details, the books of accounts of the political party, form number 24A given by the political party. You find out whether your name is there, not there. In the statement, you find out whether your donor's name is there, not there, whether the donation which is given by a particular donor is reflected in the bank account of the political party or no. And lastly, most importantly, whether the cash trail can be established or no. If cash trail, namely the donation which is given in check and cash money has flown back to the donor, that cash trail, if it is not established, then again you can say that, sir, I have not received the cash. Political party might have appropriated that cash for the purpose best known to them. How do I be held responsible for the money which I have never received? You can also ask for the cross-examination of the deponents. However, it's a double-edged sword. It's a twin-edged sword. Kindly remember that the moment you ask for the cross-examination of the deponent who have given various statements, if you do not know what that deponent is going to again say in the cross-examination, if he says things which are favorable to you, good enough. However, in a worse situation, he might say that, yes, I have received the donation from you and I have returned the money to either to you or to one of your agents, your representatives, and these are the details which I have available with me. If that happens, then you are in for a bigger problem. Therefore, be very careful when it comes to asking for the cross-examination. These are the law on the cross-examination, that it's a matter of right. Would take me to 2021. Look, 2021, now the year is over. So far, no reopening notices. And secondly, 139.8A time limit is now over, because 139.8A says that you can file an updated return up to a period of 24 months. So 2021, the 24 months are over on 31st March 2023. Therefore, you can't now file any updated return. Therefore, what are the options? Option, can you go and ask for 119, the belated revision of return permission from the CBDT? Again, this is going to be an interesting subject, because whether you can ask for filing a belated return for 2021, wherein you want to surrender this additional income, it's going to be an interesting debate, and we'll cover it in a shortly from now while discussing penalty. 21-22 onwards, the option of 139.8A is available, and if that 139.8A option is to be exercised, then my suggestion is that you have to exercise it now within a period of next 2 years. You can cover 21-22 and 22-23 by filing a updated return, paying necessary taxes under section 140 capital B of the Act. Advice is, if at all that is available, and if the amount of the donation is small, file an updated return and get rid of the problem. However, one might argue that clause D of second proviso to 139.8A says that in case of a search at a third party, if any document material relating to an SSC is found out, would that come into the way in filing the updated return? My opinion is that clause D will have no impact insofar as 139.8A is concerned, because that clause would come into play only if notices are issued. In your case, admittedly, no notice are so far issued for 21-22 and years onwards. Therefore, you can safely file 139.8A return. Penal consequences, 17-18 earlier years would be covered by 271(1)(c). The only legal lacuna is 1C for years earlier 17-18. If 148 notice is issued, and if you file a return in response to 148 notice and surrender this claim, then probably 271(1)(c) penalty cannot be levied. And one can argue that, sir, I've already disclosed this item in the return of income, no question of levying penalty. So years prior to 17-18, probably one can even explore the option of surrendering this claim while filing the return in response to 148. Years after 17-18 would be covered by 270(A), and there is a specific provision which says that even if you surrender it in the return of income, the comparison would be carried out between your return filed under 148 vis-a-vis your original return, and therefore you would be caught under 270(A). The next question is 270(A), what kind of penalty would be levied, whether it will be treated as an underreporting or misreporting. As the things stand today, one can say that department is going to go for misreporting because you have deliberately claimed an expenditure which you knew to be false. And therefore, they would say that this is misreporting. Our submission is that, sir, I did not know that political party was running a racket of accommodation entry, and therefore I gave the donation, presuming that to be a genuine donation. So it is going to be an interesting debate whether it is underreporting or misreporting. If it is underreporting, then we can also explore 270(AA) option, wherein you pay the tax and interest, do not file the appeal within 30 days time, file a declaration, and you can save yourself from penalty and prosecution. Prosecution is again, as per 2019 guidelines, ideally prosecution would be done here, kindly mark, it is tax evasion and not the quantum of income. So tax evasion in excess of 25 lakhs would certainly attract prosecution. Anything below that would require the approval of a collegium consisting of CCIT and DGIT. Therefore, again, my personal belief is that department would not be initiating the prosecution for small amounts, but you can never say if there is a general circular which says that prosecution in case of bogus political donation is required to be issued for all the concerns without having regard to the claim of the quantum of deduction, then probably we are in for even the prosecution. The two side issues, one is 80GGB and 80GGC, whether it would be added as a denial of this deduction or section 68. Look, if it is simple denial, I presume that it is going to be under 80GGB. However, if the department says that, sir, we do not question based on the legal position, we do not question 80GGB deduction. However, we are taxing you for the cash money that you have received from this political party, and therefore this is nothing but section 68 addition. Then you are in for a larger sum of tax on the ground of 115 DBE. And therefore, if department adopts that strategy that we want to not disallow the deduction, but make an addition under 68 for the alleged cash that you have received, the larger tax consequence would arise. And lastly, the intangible cost. We have corporates which are having the highest standards of corporate governance. If your employer comes to know that you have indulged yourself into such a, I would say, immoral act, then probably there could be a larger intangible cost also. Those who are employed with big corporates, government employees, there also this is going to be an interesting issue, that in what manner their CR is going to be affected because they have claimed a admitted bogus donation as per the department. So with this, friends, my summarize, if I give you my summary in one word, summary of the entire discussion is that in case if the amount is small and negligible, or I would put it this wise, that if you can afford to pay the tax, pay the taxes at least for the years where updated return option is available. In case for the year the proceedings are already reopened, and if you are already there before the department, my advice is wait for the assessment order. In the assessment order, all the defenses which I have cited, you can cite, but wait for the assessment order. In case if the assessment order department takes a view that this is underreporting and not misreporting, grab the opportunity under 270AA and put an end to the whole thing. Ultimately, if you are compelled to contest this, then you have a long drawn battle ahead of you. battle is both expensive, because law nowadays is highly expensive. It's a luxury available only to few. And for small amounts, I would not suggest anyone to go into a long-term litigation. And secondly, more importantly, it will give you sleepless nights. Lot of peace of mind would be robbed, and you would be rendered completely at the mercy of the department, which I would suggest that you should not do. Because as they say in India, it is the process which is more painful than the punishment. So even if you get out at the stage of, let's say, tribunal, the intervening 4 or 5 years, you would have suffered like anything. And therefore, the suggestion that if it is a small amount, don't contest, surrender. With this, friends, I conclude my session within the allotted time to me. I would invite now the question answers, if at all they are available, then I would be happy to deal with them. Anjali Ben, over to you.
Thank you, sir, for always enriching with your knowledge. We have received more than 20 questions. So taking one by one, how to distinguish between genuine political donations and a bogus political donation?
The burden is on the SSC. SSC will have to prove that the political donation which is given to a particular political party was not covered under the search. And if that party is not covered under the search and no material is available, then one can safely say that this is a genuine donation.
Great.
However, having said that, let me also spend 1 minute more. Having said that, in a case of a search party, if you want to still contest that my donation was a genuine donation, then probably you will have to adduce evidences to the effect that that political party, which is searched by the department, has carried out at least some political activity which were genuine. And in absence of there being any bifurcation as to which donation is used for genuine activities and which donation is not used for the genuine activities, it is anybody's game. Yes, over to you.
Next question is how interest of genuine donation to such political party can be protected?
Sorry, can you?
Interest of genuine donation to such political party can be protected.
I have already, that is the same question, that whether if I believe that my donation is genuine, then it is burden is on me, because department has already discharged its prima facie burden of proving that the entire donation is bogus. So now the ball is in my court, and in any case, I want to claim it under 80 GGB and 80 GGC. Therefore, whichever party wants to claim a particular deduction has to establish.
Okay. I think the next question is also connecting. For deduction under section 80 GGC, there is no word of recognized and unrecognized political parties in Income Tax Act. So I think this is in line with the first and second question.
Yeah, because it is ultimately you have to go to the People's Representation Act, and therefore the requirement as regards recognized and unrecognized political party is flowing from that act. And therefore you will have to find out whether it is your political party is fulfilling all those requirements or not.
Okay, this is regarding the lawful evidence. Can a WhatsApp chat considered as a lawful evidence in the eyes of law?
Not straightway. However, under the Information Technology Act, if the contents of the chat can be established to be correct by extracting the data from the server and thereafter taking a technical certificate from the concerned authority, that can be relied as valid evidence in the eye of law.
Okay. The next question is again, if some parties are not in the list of 23 RUPP parties, recognized and unrecognized, then what will be the validity of notice?
Then you can certainly challenge that, sir, what is the information that is available with you? Even prima facie suggests that these political parties are bogus.
Okay.
Once you have that information, because there needs to be some basis. Department cannot simply say that we believe that this party is bogus because we think so. So that you need to ask for the material which is available with the department. If that material is not sufficient, probably you can challenge that action.
Okay. The next question is regarding section 148A subsection B. Notice issued in name of dead person under this section. Should I wait till the order is passed under section 148A subsection D and notice is issued under section 148?
I would suggest that as a law-abiding citizen, you have to respond to the notice and state the correct facts. But many times, silence is more valuable than speaking. So ultimately, the person has to decide whether he wants to take his chances by not saying that that person is dead and he is a legal heir, because this action ultimately is going to be challenged before the court, and court is certainly going to ask you that, sir, what prevented you in submitting these details before the lower authority, because only with a view to avoid the legal proceedings. Therefore, ultimately the call is of the SSC. However, the law says that you have to respond to the notice.
Great. Form 24A was not required to be filed in assessment year 1920. Is it required from assessment year 22-23? Form 24A.
Form 20. Look, ultimately the question is whether Form 24A is just a mode of sharing information, assuming that 24A is not there. However, in the books of the political party, the donation would certainly be reflected. And if that reflection is already available with the department, along with your banking details and the PAN details, because PAN is required to be stated on the notices, the receipt of 80 GGB and C donation, then in any case, your information is available. So whether 24A is there, not there, is not going to make much of a difference. Only thing is, the purpose of discussing 24A is that in any case, every information is available with the department. So assuming that seized material is not sufficient, 24A would fulfill that requirement. So either ways, the moment information is available, action can be taken against the SSC.
Great. What to do in case of, since the notices are issued by different jurisdiction and not by original jurisdiction. So what to be done in these cases?
You can challenge the jurisdictional aspect by pointing out that my jurisdictional AO is somebody else. The law is well settled that notices of reopening can only be issued by the jurisdictional assessing officer and not by any other person. However, intercity, namely, supposing Ahmedabad, I am assessed by Ward 4 and the notice is issued by Ward 6, then 127 order can be passed even without serving a copy upon me. So more often than not, once you challenge that action, department would come with some letter transferring the jurisdiction, because that's an internal communication and you are not a privy to that communication. Therefore, probably even if you challenge that action, nothing may turn out of it. However, if you are confident, you can certainly challenge. It's an interesting legal issue that non-jurisdictional AO cannot issue the notice.
Great. The next question is it necessary to mention the reason about the purpose of donation for donors?
No, that is not something which is flowing. In fact, that is the reason why I read the Ahmedabad Tribunal judgment and the Act also. It says that I just have to give the donation and it should not be in cash. That's all.
Okay. The next question is, similar searches had been conducted in group companies providing loan accommodation entries. Now, beneficiary of these entries are receiving notices for explaining whether these entries are loans in balance sheet or they are accommodation entries. What are your views?
You'll have to say that these are all loans in the books or your books, because ultimately, if you say that these are accommodation entry, you'll have to surrender that. So you have no option but to say that these are all the loan entries, and you have to establish that fact by adducing evidence that you have not received. This is not, look, the presumption in accommodation entry is that one leg of accommodation entry is always settled in cash. And therefore, once it is a case of a search, then you can say that in the search proceedings, did you find any information as regards the settlement of cash for the second leg of the transaction? And therefore, in absence of there being any cash movement established, even after search, you can always say that these are loans which are genuine loans, and ultimately you will have to contest on that.
Okay, sir, we have received many more questions. I think we have reached 20, but 10 more questions to go. So thank you for being so quick. Notice issued under section 148A on March 31, 2023 for the assessment year 1920 by taking mere support of the information available with the AO. The information have neither been explained nor been worked by AO to determine any proposed escapement of income. Kindly share your views whether it should be replied to or should we file a writ petition for quashing the same.
No, ultimately it's the process is the notices are issued under small b. You have to file response under small c, and order is passed under small d. So in the process of filing response, whether you have raised all these objections or no, I do not know. If you have raised it and if they are not appropriately dealt with, you can certainly approach the court of law. That said, again, the explanation of information is not something which is necessary. It is not required from the department. All that is required is whether department has information which would suggest that there is an escapement in the hands of the particular SSC or no. Therefore, at this stage, what we need is suggestive information. Now that suggestive information is a prerogative of the department. So department should not explain that, sir, by this process of logic and reasoning and establishing the evidences, I have now reached to the conclusion that there is an escapement in your case. They would say that, sir, we have information and that information suggests. Kindly understand the difference between suggest and establishing. They say that at this stage, what we need is suggest. And therefore, even if they simply rely on the information and issue the notice, probably they are right. However, you have to file a detailed objection in your small c response that, sir, this mere suggestion is not sufficient because of ABC reasons. If that is either not dealt with or according to you dealt with in a manner which is not appropriate, we can certainly challenge it in the court of law.
Great. The next question is, can we invoke both ATGGC and Section 68?
I have already explained this. ATGGC is whether deduction is required to be denied or not. That is one. If they say that, no, we grant you deduction, however, we tax you for the cash that you have allegedly received from the political party, Section 68 addition would be made. Mere disallowance of ATG would not result into 68.
Okay. The next question is, once it is discovered that the party is bogus, how could we update return after removing Section 80 GGP deduction, even though no notice is received till date by the SSC?
That is 139.8A. I already explained that if at all time is available, you can do it for assessment year 21-22 onwards.
Okay. What would be the impact if the donation was made through electoral bonds?
That the process is the same, because ultimately you are also claiming deduction under Section 80 GGB and 80 GGC, and the electoral bond also goes in the political party's coffers. So if that ultimately it will not change the situation at all, whether it is a donation per se or electoral bond. It is only a medium of giving the donation.
Okay. 25th question, if donation is surrendered, whether penalty will be leviable or not?
Absolutely. Supposing if you file a return under 139.8A, then there is no question of penalty, because that is what the law provides. However, if there is an addition which is made, and in the course of this 1920 assessment proceedings, you concede that, sir, there is a bogus donation, kindly disallow this, then also the penal consequences would follow. The only way out is that even if you surrender and there is no penal consequences, would be for the assessment year prior to 1718. Under 271(1)(c), if you surrender it in the return which is filed in response to 148, probably you can get away. However, under the 270(A) scheme, there is a specific provision which says that the additional surrender of income would be compared with your original return, and the difference is always subjected to penalty.
Okay. 148A is not issued and the order has been passed under Section 148A and 148 notice is issued. Can we fight that 148A is not issued, even so 148 notice is not valid?
148A, that is not. I understand 148 capital A, small a is talking about. If small a is there, then small a starts with assessing officer if required and comma and then carry out the investigation. So if required would come in his way, because 148A, that is 148 capital A, small a is not mandatory. It's only if required.
Okay. Is there any list of political party which were covered in the search?
It is available in the appraisal report, and that is also freely available. Any SSC who is now subject to reopening can ask for this as a matter of right.
Okay. Sir, can you please elaborate on Section 270AA?
270AA is basically within a period of 30 days after the framing of the assessment. If you agree to pay the tax and interest and file a declaration to the effect that you are not going to challenge that order in any way whatsoever, then you are not visited with the penal consequences. That is no penalty and no prosecution. But you have to pay the entire tax and entire interest which is levied under the assessment order. One catch is, if at all in the order, if the penalty is initiated for misreporting, then you are not entitled for 270AA. If it is only under reporting, that you are entitled for 270AA. And if no penalty is initiated, in any case, you are entitled for 270AA.
Okay. 30th question. Notice issued before 31st and received by the SSC after 1st. Is the proceeding time barred?
I have already covered that. You'll have to take into consideration third proviso and the last proviso to 149 and exclude those times in case after exclusion of the time which is prescribed under those provisos. In case if it is issued beyond 31st March, then probably it is taken as a time bar insofar as within 3 years criteria are concerned. If the donation is supposing, let's say 1 crore, then in any case department can justify that because thereafter it is permissible even beyond a period of 3 years.
Okay. The show cause notice under section 148A(b) contained the name of JAO only, and it is neither signed digitally nor signed physically. The annexure to notice is signed digitally. Whether this issue should be raised by replying to show cause notice or should be raised at a later stage?
You can cite this, you can raise this dispute because as per 292BB, all these objections are required to be raised at the time of responding to the notice. And we have a direct judgment of Mumbai High Court recently. It's a last 2 months decision. We can check on the internet. There, the unsigned notice was held to be legally not valid.
Okay. Next is...
I'm sorry, it's not a curable defect under 292B also. That is what the Bombay High Court has held. So you can certainly raise this issue. Yes, over to you.
Yeah, 32 questions. Would difference in the notice amount and the actual donation amount render the notice redundant?
No. That in any case, the whole purpose of 148 capital A, B, C, and D proceeding is to reach to the correct amount. So even if they start with, let's say, B notice 1 crore donation and thereafter ultimately settles for something less or something more than that in the process of after having gone through the responses, etc., that would not render the entire proceedings invalid because the whole idea of that process is to find out the correct facts.
The next is, we have received notice under section 148 after giving reply of notice under section 147. Department is of the view that it is the fit case for reassessment. What should we do now? File return with same income or file return accepting the donation of 3 lakh rupees?
Even if you accept 270 capital, a penalty would be levied. So you'll have to decide yourself that whether this is a case where you would like to surrender and fight the penalty alone, or you would like to challenge the addition on merits and take your chances. Because even if you surrender at this stage, 270 capital A penalty would certainly follow. And once the penalty is confirmed, in case if department wants to initiate the prosecution, they can also issue prosecution against you.
I think this is the last question. Donation done in 22-23, can we claim in ITR or not?
Now 22-23, your return is already filed or yet to be filed. If it is not filed, I would not advise you to claim it in case if it is given to all these 23 political parties. In case if you've already done it, then you can also file updated return under 139(8)(a). But looking to the present scenario, I would not like to jump into this, unpleasant litigation. So better not to claim it.
Great. I think you have answered all 34 questions, a marathon of questions, and with super quick answers. I think I should end now, and it would be a pleasure to propose vote of thanks. As usual, sir, आपका lecture हमें बहुत सारा ज्ञान देता है, हमारे बहुत सारे problems solve करता है. So my heartfelt gratitude on behalf of the CP committee of ICAI. Thank you for always being available for us. It's glad to have you here. Thank you so much, sir.
My pleasure.
Thank you. Thank you, sir.
Thank you.
Thank you, audience. Yeah.